All right, guys, we're live here. Sorry for being a little bit late, but a flat day in the stock market doesn't mean it wasn't volatile. It was a pretty wild one, actually. You had the FOMC minutes that came out at 2 p.m. Eastern, and it reversed the entire stock market. For the most part, everything was down. Oil was rocketing. FOMC minutes come out, and the market just completely reverses fortunes. Oil goes down. S&P 500 rallies, Russell 2000 rallies, Nasdaq 100 and composite rally as well. So what does that really mean for us going forward? Is there really anything that we can take away from the FOMC minutes? Well, one of the things I noticed is that the FOMC was kind of non-threatening to the market, I guess. But one of the things that you have to keep in mind too is that those minutes were based off of a discussion from 3 weeks ago. Federal Reserve, they met, the governors, they met, and they were talking more in the minutes about a quarter point rate hike rather than the 50 basis point rate hike that a lot of people are assuming, including myself. So why is that important to know that it was 3 weeks ago that meeting took place? Well, you've had since then the CPI report come out. That was where inflation ticked up from like 6.9 or 7.0 up to 7.5. And then you also had the PPI that went into the 9. So it was big on both fronts, and that wasn't being accounted for when they met 3 weeks ago. So you saw Bullard last week and this week taking a very, very hawkish tone for future rate hikes. So I do think that their attitude has shifted quite a bit since that meeting, and I don't think that the market is necessarily pricing that aspect in. Instead, they're looking at it and it's like, we're going to just rally. I think the market was wanting to squeeze shorts today. I think it was just simply wanting to rally because that's what the market wants to do. It wants to create the most pain for the most amount of people. So we're going to look at the S&P 500, the Nasdaq, and the Russell 2000 from a technical standpoint. I also want to go back and look at where do we stand versus some of the past sell-offs. How does this price action compare to like what we saw in 2018 and 2020? And so the other thing I would say too is that with the S&P 500, you're going to get a significant sell-off like what we saw in January. And then it's not uncommon to see the stock market bounce, the indices bounce like what we're seeing so far in February here, because it's difficult to do just a one rug pull and the market goes straight down. Yes, you've had periods throughout history where there was the big market crashes like the 27% sell-off back in 1987. But for the most part, if it's going to be a multi-day sell-off or multi-week, multi-month sell-off, there's going to be rallies in between. But those rallies are usually what gives a lot of traders hope and optimism that the worst is behind them, only for that rug to be pulled out from underneath them again and start that next leg down. And so that's what I want to look at as well as some of the past sell-offs and what we got. Now, the S&P 500, and I'll go ahead and transition to that chart here now, has this head and shoulders pattern. I got two lines on here. First one is the neckline of this head and shoulders pattern. And where's the head and shoulders pattern, you ask? This is the left shoulder. This is the head. And by the way, too, make sure to leave your comments in the comment section. I see them all, and I'll get to your charts and requests as they pop in. Again, you got the left shoulder, you got the head, and you got the right shoulder. And do me a favor too to make sure to like and subscribe to this channel, because that does help me continue to build this base as well. There's a lot of action going on around this 200-day moving average. You've got it trading below the 200-day on Monday. You got it trading below last Friday, and then it pops back above it yesterday on Tuesday, and then drops back below it on today, and then finishes back above it. What does that say? Well, I always say that the moving averages are only important as long as they remain important, as long as they show a tendency for price to bounce off of them. What we're seeing here is really not much respect for the 200-day moving at this point. We sliced right through it here back in January. We get right back above it here in late January. We bounced off of it here, but then we go right back below it again and go right back above it. So it doesn't have its effect on the markets like it might have had, a couple of years ago, when it was being tested way back when. So I wouldn't put a lot of merit on the 200-day moving average playing an important role in the market going forward. So again, head and shoulders pattern here. What are we looking for here to confirm this head and shoulders pattern? Well, price needs to break back below this massive neckline. It's around about 427 or so. We had a big dip below it at one point, but that was an intraday move that saw it actually close back above it by the close of that trading session. So it's always more important for a confirmation with trading patterns that price actually closes above that confirmation level or below it if you're trying to get short. So SPY here, head and shoulders pattern, yet to close below the neckline of it. Now, if this rally keeps on going, watch this resistance level. It's popped above it a couple of times, but it's not been able to sustain the follow through or momentum into the next day. In the last 2 Thursdays, it's been interesting because we're going into a Thursday tomorrow, have been met with rallies on Wednesday followed by massive selling on Thursdays. I'm not really one that says that, okay, Mondays are for selling and Fridays are for buying or vice versa or anything in between. But it is something worth keeping an eye on because we've seen some heavy selling on Thursdays of late. So, all right, so that's SPY here. We're going to get into the Qs. Head and shoulders pattern as well. You also have this other resistance level too. But what makes it stand out as being a little bit different is the slope of this neckline on the Qs. So it actually tested it yesterday, bounced off of it. 200-day moving average, again, like with the SPY, I don't put a lot of weight on that anymore because it just seems like it can, bust above it or below it at will. Though it did last Wednesday, hit it and then get rejected on Thursday by it. So, but nonetheless, this is the neckline that you want to be watching on the Qs. If it breaks through that level, well, I would start looking at maybe you're probably looking at another move back down to like 315 on the Nasdaq. So it's a significant move, but very possible too. Look, this is a big topping pattern, but we've also been running really hard off of those COVID lows. Finally, IWM, and that's the one chart that's a little bit different than the rest of them here. The sideways channel going all the way back to February of 2021. It has yet to break below it. And, or I'm sorry, the channel, it did break below it, but it hasn't been able to break back above it since then. So you got a little bit of resistance here to watch for with this 50-day moving average. But in all, this looks more like a bear flag pattern to me, quite honestly. So I try not to come across as like super bullish or anything, but it's hard, or bearish or bullish on, in any market, just because things can change so quickly. I'll increasingly, I'll add to my bullish exposure or bearish exposure, but I don't really get like, where I'm cheering on the stock market necessarily. But with these charts here, they do look very bearish. Not really a big fan. And I still think that at some point in the future, this Russell 2000 is going to test this 160, mid 160 somewhere, maybe even like 170. But that would be a significant sell-off. But it just seems like it's in the cards with this massive support level and very little support in between confirming this bull or bear flag pattern and retesting this massive support level there. So keep that in mind. Now, about the SPY. How does SPY relate to basically what we have seen over the past month here since the market bottomed back on January 24th? You've had a nice little rebound. I mean, actually, it was a significant rebound, hundreds of points, but it's been very choppy as well. Well, let's also look at why are we selling off right now overall since the beginning of the year? We're selling off because the Fed's removing its hand from the market. It sets that it's not going to be buying assets. It's not going to be adding to its balance sheet. It's looking at raising interest rates, a quarter point a meeting, maybe even a 50-point rate hike to start it off. And so that's what's got the market scared. Now in 2020, when we shut down the economy due to the COVID panic, we saw a sharp sell-off and then we saw a bounce, very similar bounce right here to what we saw here in 2022 here, right? Very similar bounces. The difference here, this bounce sustained and it kept going higher. And we know the rest of the story because it's where we're at right now in current pricing, just a massive rally off of these lows. Because the Fed was injecting money, it dropped the interest rates back down to zero. It also started, adding to its balance sheet. So it's the exact opposite of what we're seeing right now. It got super hawkish, whereas now the market is looking to get dovish. All right. Now let's go back to 2018, Q4 2018. We have the initial sell-off. And I truly do believe that the market wants people to get complacent in their expectations for the market. A lot of people are chasing the rally today off of the FOMC minute lows, thinking that the market's going straight back up to all-time highs. It wants to lure in as many bullish investors and traders as possible, because what's going to happen after that is once it pulls the rug from underneath them, it's going to create a massive selling panic. And that's where you see panic like what you saw here in December of 2024 or 2018. I don't know why I would say 2024, but 2018 take place. I mean, this was massive amounts of selling, going from 266 on SPY down to 234. So you have initial sell-off, and we get this real choppy price action. This is very similar to what we're seeing right now. And then when everybody's starting to think, hey, we're going right back up to the all-time highs, instead, we go straight down and create some incredible buying opportunities. And that's really what we want as traders. Is you can't really buy long-term investments right now when the stock market's trading at these crazy all-time highs. So again, very similar price action to keep an eye on. All right, I'm going to pull up the comments because it looks like I'm struggling to get some of the feedback here from you guys. Bear with me here.
Savings are
all right, it looks like I'm having a little bit of trouble here from a technical standpoint, but overall, you kind of get what I'm looking at here going into the month of March and beyond. There's a lot to be concerned about. There's a lot to be nervous about because the bulls simply don't have it all together right now. And even though you're seeing some good rallies, here and there. I mean, we saw some the last 2 Wednesdays. We saw some that just looked like we were going straight back to all-time highs. What you got to be really nervous about is that these FANG stocks start to crater. And if you start seeing, let's say, Apple fall down from the 170s, maybe down into the 150s or 140s, that would be a huge issue. And if you start seeing Amazon's been a little bit more bullish of late. But if that one starts to create these multi-trillion-dollar companies, that's going to be a huge problem for the stock market. And you want to make sure that you're not overexposing yourself to the long side simply because you're worried about missing a rally that might go up to the all-time highs. Let's say that we do. There's going to be still, and the market just continues to rally for the rest of the year. There'll be opportunities to get long from a trading standpoint. But what you don't have to do is just get caught up in this hype. I mean, today in particular, following the FOMC minutes, we're way down, we go back up. I'm seeing people chase this market. They don't even know why they're chasing it. They're just saying, well, the market's going up. I got to get myself right back in it, because there's a fear of missing out. And that's still very prevalent in the stock market right now. So final chart that I'll leave you guys with here is Bitcoin. Yeah, I can look at the VIX. I'm starting to see some comments pop in here, but yeah, I will look at the VIX here, and I will look at the Bitcoin as well. So what I like about this Bitcoin is this inverse head and shoulders pattern. Guys, I mean, this one's pretty solid looking. You see this? This is your neckline on Bitcoin. Breaks through this neckline. I can probably draw it a little bit better for you. You can see it multiple times it's tried to break through it. Hasn't been able to quite do it just yet. But you got the left shoulder, you got the head, and then you got the right shoulder, and now it's poised to break out. Now, one of the things that I'm kind of concerned about this week is that we were talking about there's a little bit of a decoupling last week, but it seems like it's back to following the market's whims this week here. So, if the market sells off, Bitcoin's not necessarily a safe haven just because the stock market's selling off. There's a good chance that you will get a sell-off in Bitcoin as well. One of the big reasons for that is because people are so heavily in margin right now that even if they have a winning trade going on in Bitcoin, they have to go raise the money from somewhere to meet the margin call, right? Or margin requirement. So they'll sell things like Bitcoin. So that could be a problem. But I really like Bitcoin. I even have some Bitcoin on my own here. And it's actually a profitable trade. I think I got in somewhere around like 36 or so. But when it bounced off of this long-term support level. But it hasn't really quite broken out yet. So if it breaks out, I think that you have some room to go to about 51,000 would be my next level for Bitcoin. So right about here, you can see you get some resistance right here. I got to draw it here for you guys. You got some resistance right there, and you got some more resistance right there. So that would be the next logical place for Bitcoin to trade up to. And then if it can break up to that, then there's a good chance we're going to go right back up into the upper 50s, maybe even the mid 60s. All right. So can I take a look at the VIX? Yes, I can. Let me go ahead and do that here. I'm going to flip over to the VIX chart. All right, on the VIX, this is a level here that I've been watching the whole time. This massive resistance level. If it can't break through that, you really don't have a major sell-off coming. And so far, it continues to just get whacked every time it breaks above it. I do think eventually we're going to break through this. I don't know if we're necessarily going to see the same kind of rally that we saw from the COVID spike all at once like that, but I do think that there's a good chance that we could see a spike similar to 2018 where we got into the 50s, or if we go even further back, at 2000, 2001, where, we're getting up into, maybe even the 60s. Right now, though, on the other side of the equation, you do have a series of higher lows that is forming on the VIX right now. So this has been since the beginning of January. Yes, we had the big spike there, and then we've come back down, but we're holding that trend line. Maybe we come back down and test that 20 level again before we spike back up. So that's the VIX in a nutshell there. It still remains very elevated. Anything over 20 tends to be a little bit more of a bearish concern for the markets. Right now, it's sitting at 24 despite the 5% sell-off today, and probably like a 10% sell-off, 9% sell-off yesterday. How about Apple? All right, let's get to that. Hey, go ahead and just move myself right on down over here just to make it a little bit easier for us here so I'm not getting in the way. All right, with Apple, you have this rising support level. And for a while here, it was trading in this channel. Then it breaks out of this channel. This one surprised me. When it broke out of this channel here, I didn't think it would. I saw too much of SPY when it had this rising channel here. It was just bumping its head up against this rising channel for the longest time. And it can never break through it. Never did. So Apple has a similar rising channel starting from pretty much the same place. It starts to get up in this area here. I was like, nah, probably is going to struggle. I saw this candle here when it did break above it. I was like, oh, look at that. Next day, it fell back below, and it quickly retook that level. So it has surprised me a little bit. Even in the sell-off, it fell below it and quickly recaptured it. It's amazing to me that it's still holding it. So this is one of the most bullish stocks in the market right now, simply because it hasn't really bowed the knee to the overall trend of this year. It has actually done a very good job of maintaining most of its value throughout the course of 2022 so far. So if it can break this declining trend line here, I think like 175-ish, I think there's a good chance for a move up to like 181 or so. Trying to see here you may have a little bit of a trend line here worth paying attention to. No, I wouldn't say so. But yeah, this rising support level here, this is what I'm going to watch for potential bounces, just like what you saw on Monday. And then this declining resistance. So it's stuck between a support level and a resistance level. This is the one I'm looking at to see, okay, if we break it, probably going back up to those all-time highs. All right, where can we find the weekly option ranges if you know which ones I'm talking about? Not really quite sure what I mean, you can go to Thinkorswim and you can find all the different strike prices and stuff there. And I oftentimes will go there. VYGVF. Take a look at this one. All right. So it's in a perpetual downtrend so far. I mean, it's only tested it one other time, but you still have a series of higher highs and higher lows. I mean, you have where the trend, the upward trend ended, then you got a higher low or a lower high, I'm sorry, and then another lower high, and so it's just like one lower high after another. I'm not even sure what caused it to go up. This looks like it was part of maybe like the Wall Street bets movement back in early 2021. This one's hard to really get a sense of where the support. I would probably say it's riding some major support right now. It's declining support, but that's basically the best that I got on this right here. There's not much else to go for. Eventually, it needs to get back above this 1670 level, and that's a long ways away. It's got to more than double. So you're talking about a lot of volatility, a lot of hope that you're baking into the stock to in hopes that it comes back up. So I don't like the stock at all. I think it's kind of a dangerous one here right now. I don't know too much about HIVE. Let me see if I can pull it up here on one of my charts. I don't have too much thoughts on it. You know, if I was giving you an opinion on it, on HIVE, I think I'd be probably misled because I'm not quite sure what I'm talking about on that one. In terms of like crypto and everything else, I think it's very interesting. I think it's very much in its infancy. I'm willing to play it just because there's enough liquidity in it. I'm not a huge fan of like the bid and ask spreads compared to what you get in equities. But HIVE is a BTC miner. It's not a stock, is it? Oh, maybe you were talking about the stock. I thought maybe you were talking about something else. I didn't have a clue what you were talking about here. Okay, so let's look at HIVE. Thank you for helping me out there, EOG. Okay, so big part on this chart here. I can go over any kind of a chart. Stuff I was pulling up on the crypto front, I was like, I don't know what the heck we're looking at here. So that's why I didn't want to get too involved in it. But HIVE, you have, first off, you have a pretty big, and that's the part of going live that you don't have as much opportunity to prepare for everybody's questions because they're being given to you live. Double top, that's a massive double top here, guys. Okay, big time. And then let's see here. That's what I would say would be a massive support level as well, followed by a bear flag pattern in development. So I'll zoom in on all this stuff here. So right here is your double top. You got a support level that's going across. It looks like price is just literally sitting on support. It's gone above it. It's gone below it. But what scares me a little bit, if I go ahead and just take the support level off, is this bear flag pattern. So I would be watching, okay, maybe a break below the 20-day moving average, and out of this bear flag pattern, it gets much more bearish at that point. And we got Mr. 4129 Crane asking me, how often do I go live? I go live right now. I'm trying to do about once a week. Reason being is that because I think it's probably most beneficial just keeping it to once a week right now, because I do the video on the weekends, and I also have podcasts that I do as well, which you can send me your questions for the podcast, Ryan@SharePlanner.com. And while I'm thinking of it, make sure to keep hitting that like button and the make sure you're subscribed to the channel. But I'm going live about once a week right now. Wednesdays, that's what I'm kind of aiming for right now, just because you go maybe live too often. It's not the best thing. I can go ahead and look at SOFI for you guys too. This one here, guys, SOFI, it gets so many people mad when I comment on this one. I kid you not. If I post it on Stock Twits or on Twitter, people like lose their mind. You can see I've marked it up quite a bit. You've got a trend line that goes back. Well, you got multiple ones here to talk about. You have this trend line here that goes back to the very beginning, right? It's broken that one, tried to recapture it a couple of times, couldn't do it. And then you got this big support level that's going all the way across that seems to be weighing down price support. Now, I'd say this. If it can break back above this price level here, let's say it's $14. There's a good chance that it's going to break out. A lot of hype on this stock, though. Got a declining trend line. It's broken that. But, guys, I'll be honest. I think you got support basically around 1045, 1046. That's not an exact precise number. You can just say maybe 1050. Actually, let's just say it's the lows where it started off trading back in November 30th of 2020. But until it can break back above this support or this broken support level, or call it resistance if you want, it doesn't look very appealing to me. So DraftKings, man, we got some latecomers here today. I thought, am I even going to get any comments here? I don't know. I thought something was broken on YouTube, but you guys are coming in. I don't know if maybe they notified you late or what, but DraftKings. I'm going to talk about DraftKings, and I want to talk about PENN too, because PENN has been on my radar a lot lately. I haven't made a trade in it yet, mainly because I'm not overly confident in the market right now. But DraftKings, you got to be careful because there's a lot of these popping up in a lot of charts. It doesn't necessarily mean it's going to confirm it, but I don't think they're the most bullish patterns. And a lot of this has to do with that February chop. If its stock didn't really rebound real aggressively off of those January lows, it kind of formed a bearish flag. And that's kind of what you have here with DKNG forming this bearish flag in an already existing downtrend. So the downtrend's been broken with the bear flag, ironically, but that doesn't mean that it won't take that next leg lower. It just means that this leg of the trend is over with. So you want to be careful with that. There's also looks like maybe some resistance right there that if it continues to rally, that it'll need to break through. And the reporting on Friday, if they're reporting on Friday, you don't want to play those earnings, guys. Those kinds of earnings can be very, very dangerous to play. I mean, look at something like MVTS today, right? Look at this one after earnings, down 17%, more than 20% at one point in the day. Earnings can be very, very dangerous. I mean, look at Facebook, right? This Facebook, one of your biggest companies out there, just got shellacked. Netflix as well. I don't like to play earnings because it's so unpredictable. Even if you know exactly what the earnings report's going to be, the EPS, you don't know how the stock's going to react. You know, what is guidance going to come in at? So it's very, very difficult to play earnings. From a swing trading standpoint, I don't do it. Now, I talked about DKNG and said I would talk about PENN. Let's do that now. Look at that. Quite the basing pattern, right? Really nice basing pattern. Has a little bit of that bear flag pattern as well, but it's part of this bigger basing pattern in PENN. Now, you don't see as anything like that with the DKNG. Geez, DNK. I'm just going to spell it out. I'm getting all my DraftKings, DKNG. Didn't I say that? You don't see. You just see the bear flag and a harsh sell-off. With PENN, see much more of a basing pattern forming, and it's close to breaking out. You just want to make sure that if you play the breakout, you're cognizant of how bad this market has been so far in 2022. You got a little bit of resistance here at the 64, maybe 63 to 65 level that you want to pay attention to, but it's enough room to run that it would be a really good trade setup if the market can hold itself together. In terms of stop loss, I'd probably put my stop loss below the Monday lows. What you guys got here? A whole bunch of these five-letter symbols, huh? Okay. Downward trend. That's a pretty solid trend line right there. It's been tested 3 times. It's rejected price each and every time here, starting with the first one, the second one, and the third one. Maybe even have a declining channel here, perhaps. Yes. So it gets back above, and it's a little bit of bullish that it isn't seeing a sharp price rejection like what it's seen before, but it is struggling to break through it. If it can break through it, that's huge. Okay, that's, you're starting to look at maybe a move back up to 30 from 25. But just be cognizant of it. If you're trying to get into the stock right now, it's better to wait for it to break out of the declining channel. And always keep in mind, too, the overall market, because the overall market's very difficult to trade in right now. You also have a little bit of resistance right here that's converges with the declining channel. So if it can break out of this declining channel, it's also breaking out above this resistance, short-term resistance. Let's see, digital turbine. I don't know anything about, what is this one here? We're looking at APPS here. Okay. A lot of times I just know the stock symbol, so you got to give me the symbol too. But APPS, one that a lot of people have traded throughout this year, it just remains, stuck in a sideways channel, right? I mean, this goes back to the beginning of 2021, very volatile sideways channel. I mean, you're talking about moves of over 100% from the low end of the channel to the top end. It broke below it here in mid-January, and then we got right back into it. Very similar to like what you saw with Amazon. Amazon has this sideways channel going back even further back into 2020, like July of 2020, 18 months worth. Broke below it, broke above it, but every time it reverted right back into the channel itself. So similar to that with apps here. Where's my chart there? Let's see here. You have a declining trend line that looks like it broke yesterday, but fell today. So you're not getting quite the confirmation to the upside that the declining channel even wants to break there. Lower lows right here, lower low, lower highs, lower high right there. So it's got a defined downward trend line inside of this channel. So I'm not seeing a lot of bullishness in this one unless it can get back above Tuesday's highs, and then maybe it can make a run back up to $80, $81 if the overall market holds up. And then we got Roblox. Yeah, Roblox, man. This Pelosi cannot be too happy about that one, right? Not getting political, just saying that she got a lot of calls in that thing. I don't think she's checking her brokerage statements right now, but a lot of people love this one because metaverse is the buzzword right now. Client trend line actually broke last week, but like I always say, don't hold into earnings. I mean, you get like a 26.5% sell-off here, right? You just don't want to play that game. This is the kind of stuff that will kill a portfolio, and you'll spend the rest of your year trying to make back the profits that you just lost from one freaking trade. So you don't want to be stuck in that situation. It's breaking out to new all-time lows. Did it even break the lows from January? Yep, it did. So with this one, you can try to catch a falling knife, but you may get cut many times trying to catch it. You might be catching it by the handle or by the blade instead of the handle. So this one here with RBLX, yeah, I'd have to stay away from. Maybe it can base here going forward. Maybe it creates a double bottom, one bottom here, second bottom there. Can base, fill this gap. But even then, I would need to see it go back up to the 75 level, which is a big move. That's like 50% or so, right? Consolidate and then break out. And it needs that consolidation so you have a little bit of a place to put the stop loss at without having to get too wide of a stop loss. EOG asks how everything is with the family. Doing great. Couldn't be happier, man. And I don't just say that just to put on a happy face. TLRY. So this is one that I got a lot of crap for because I did a video on these pot stocks. But I actually laid out a plan for each one of these trades. I said, hey, look at this TLRY, and I did a number of them, 5 different cannabis stocks. And it started to break out. I said, hey, this is a good sign. And then it fell back apart. And I talked about how, hey, this would be a stop loss. I think I got in at, I can't remember what I got in at, but I mean, I got a record of it somewhere. But I think it was like 1240s, honestly, because I got in right on this breakout, and then it fell back apart. So I have a stop loss. That stop loss It triggered. I got out of it. I think it was like 1207 where I got out of it. That's why you use stop losses. When I provide trade setups, it's not because I think it's a certainty that it's going to go to the moon or to, even up 10%. I provide those stop or trade setups to provide guidance of what the potential might be or where there might be an opportunity. But if the opportunity doesn't unfold, and that happens a lot, I'm right about, 55 to 60% of the time on my trades. When it doesn't pan out, I need those stop losses there to save me, and everybody should be using stop losses. So where does it stand now? Well, it's back down. It's down in the 7s. So you got a little bit of a base forming right there, kind of similar to this one here. Nice little rounded base. Almost a little bit similar to PENN base, right? We can get above, and we've seen a little bit more interest in the pot stocks of late. Get above like 754, 755. Yeah, there might be room to run. But again, I wouldn't put high hopes on it. You have some resistance here sitting at about $10. So there's some good upside there, maybe like 25, 30% if it really does start to make a run. But when you see charts like this, you just got to expect over time that time has shown us that this stock has struggled to meet the hopes and desires of investors. So you still have a downward trend there going back. My nose is itching like crazy for some reason, but going back to March of 2021, you see this, it also needs to break above that too. So a couple of things to keep an eye on there with TLRY. All right. What do we got with Hexo, huh? Yeah, 66 cents. There's not much that you can get excited about a stock trading at 66 cents. There's a reason for it, because it's a pretty bad stock. I mean, considering that I was trading at $11 and it had one of the best bull runs, or the market had one of the best bull runs, and this one went the opposite direction. It doesn't give me a lot of hope for it. I think that Hexo is another perfect example of why you got to use stop losses. But at this point, I mean, it's just a hope trade. Finally, you got AMD. I was about to sign off and you guys all came on here, man. That's fine. I have no problem going after these stocks with you guys. It was just funny because I thought I was actually wrapping up here pretty quick, and then you guys came on strong. So AMD has this rising trend line here. Wanting to see how I've drawn it before in the past, just making sure I'm not, yeah. There you go. Almost like a rising channel, broke above it, kind of like Apple did, fell back below it, tested the lower channel band, bounced. But now, let's go back here. You've got kind of another pattern that's developing as well. That is a head and shoulders pattern. So you got the left shoulder, kind of dilapidated head, and then you got the right shoulder here. So trying to hold that 200-day moving average. But if it gets below, let me draw this a little bit better here. If it gets below, I would just say probably like 100. Gets below 100, that's going to be a huge problem for AMD. It's trying to hold that century mark. Gets below it though. You can see that. I mean, this seems like it's some pretty quality support going back to December of 2020. Then you're looking at probably, I know a lot of people don't believe it when I say it, but if the market wheels come off, stocks like AMD going down to 72, it is possible. I don't care what the chip shortage is. If the market doesn't like high valuations on stocks, it's going to tear them up. So with AMD, it's had a couple of days of a good bounce here to begin February. Then I had to pull back. Be very careful with this stock here, because there is a head and shoulders pattern that's forming. And Chris K, go back after I'm done here. You can just kind of zip through, but I did do the DKNG. I actually talked about it extensively. So check that one out as well. Good session with you guys here. I enjoyed going through all those charts. Remember, market rallied nice today off of the lows. It rallied, obviously in a big way yesterday. S&P 500 and the Nasdaq are looking at trading higher for the third time in the last 4 weeks. And the Russell is looking at trading higher for a third straight week. The bounces like that are normal when you've had a heavy sell-off. The question becomes is it only going to be temporary, and are we going to start that next leg lower? The market's on the wrong side of the Fed. The FOMC minutes that came out today, they're about 3 weeks old. They didn't take into account the CPI report or the PPI numbers from this week and last. So don't think that the FOMC statement is necessarily like the Fed hasn't changed its mind over the last 3 weeks. We saw with Bullard, he's much more hawkish than he's ever been. So keep all of that in mind. Keep managing the risk. Thank you guys, and God bless.